What is going on, everyone? Welcome back to another video. We're going to be breaking down the futures contract per usual. Kind of left you guys off on last Tuesday. I hadn't traded or looked at the charts since then. So Wednesday, Thursday, Friday, nothing happened for me. I didn't trade Wednesday, didn't even look at the charts. It's been kind of a nice little break from the market as, we had the holiday. Hopefully everyone had a great Thanksgiving and you got to visit with your family and friends. So let's go ahead and get into what has happened. We're going to be looking at this together for the first time since Tuesday. Like I said, I have not seen what the market's done or what it's trying to do since Tuesday. So everything that I'm reviewing, it will be kind of just how I look at things on a day-to-day basis. So you'll kind of get a little insight on how my brain works. So first off, I'm going to take my monthly chart and I'm just going to look at what my monthly chart is doing without any of my markings on it. So I can see, all right, what we've been doing over the last several months is going to be my main focus, right? We had been one-time framing down, came back into a balance. Now, since we stopped the one-time framing down by taking out a previous month's high, we are putting ourselves back into a balance. And because this month's time frame has yet to come to an end, and we still have 4 more trading days left within this month time frame, the monthly balance is still being formed. So whether that monthly balance high becomes the high of August or the high of July will kind of determine on how much more we push up. And it's all subjective. It's all, it's an art. It's not a science. It all kind of just depends on where you feel is a very important level to you. And for me, I think I'm going to say that the 46.3350 yearly high so far for this year is going to be my line in the sand. To break that and get above that will firmly put the monthly one-time framing up for me. So if we get above that and hold above it, I think we will start to obviously attack some of these other levels on the upside, like 48.08 all-time high. And then obviously last March's high was 46.31. That July high, we only took it out by 2 points. So that 46.33 level is going to be a very, very important level to me. And if we pull up my monthly, I think that's where I think my monthly balance high is going to be. Initially, I had it here at 45.62. We've taken that out now because this monthly balance is still forming. We continue to grind on up. And so 46.33.50 is going to be the line in the sand here. So we'll go ahead and get a little bit more specific with that. And then our monthly balance low will obviously be the last or the most recent swing low of 41.2250. So monthly still being formed as far as the balance side. So we can continue to chop inside of this range from a monthly standpoint going forward. There isn't too many more points to the upside to get to that 46.3350 level. And then obviously if we take that out, we'll have to reassess and see where our balance is going to be formed. All right, now let's go ahead and look at the weekly within this balance zone that we have developed. Weekly has been one time framing up several weeks in a row since coming out of balance 3 weeks ago. So we've been one time framing up 3 weeks in a row. We've hit every upside target as far as our weekly destinations go. Last one, or the most recent one, was 45.62. Now your next target is going to be 46.1925 on the upside. So if we look at our weekly, we've come out of that balance to the upside, and now we're targeting this 46.1925. And then obviously I have on the further end that 46.60.50 level will be more of a line in the sand for me as far as a target on the upside. I think will be a very, very important level for us to get over as far as a weekly time frame. So weekly one time framing up since we stopped that one time framing down 4 weeks ago and then broke out of it 3 weeks ago, and we continue to drive. Now the only thing that's got me worried is the lack of volume on the push up. Obviously this last week was a shortened week, but the volume has been drying up. So could this be the cause for a pullback, or are we going to continue to grind up on low volume and just kind of eat away at the gap on the daily overhead? And we'll go ahead and look at that right now. So weekly one time framing up, meaning we're setting higher highs and higher lows. Now, if we go ahead and look at our daily time frame, daily's been one time framing up. Now, I'm not going to include the last 2 trading days of last week, Wednesday and Friday. I'm not going to include those in my analysis. The daily is still one time framing up. We've been one time framing up 1, 2, 3 days in a row. I'm going to treat the last 2 trading days as one trading day as a whole, and say that it's an inside day, kind of like this candle was. So one time framing up, looking to come out an inside day to the upside on the daily time frame. Now we are inside of that gap. Okay, so if I pull up our gaps here, we did push into that gap on Wednesday, right? Pushed into it. Was that Wednesday or Tuesday? When was the 22nd? Wednesday. Okay. Yeah, Wednesday. So Thursday, Friday, I will not include. Excuse me. So Wednesday, we pushed up pretty good into that gap, but didn't quite fill it. That gap gets filled at 45.91. All right, now if we get that 45.91 gap fill, your next target on the upside as far as the daily goes is going to be that high 46.0925. So we're working our way into that gap. That gap is slowly being ate away. All right. And Wednesday's high was 45.8050. So we're going to increase or adjust this area here. So now the gap starts there. So we have just a little bit more. We got about 11 points worth of gap to eat away at. So we're looking to, as far as buyers go, we're looking to take that back, which is left unfilled so far. And then obviously we have all of these poor structure and gaps on the downside here, kind of holding this market up. The 20-day moving average has firmly crossed the 50. The 50 is curling up. The 200-day moving average is curling up. Let's see what the buyers have left in them. Do they continue to grind this thing up, or do we eventually roll over and put ourselves into a balance, which wouldn't be unhealthy for the market, right? We had a little bit of a balance here. Boom, exploded. We had a little bit of consolidation inside of a trend day. Boom, broke out of that to the upside. So let's just see what the buyers still have in left in their bag for the upside. All right, now we're going to look at our 30-minute time frame and just kind of review what happened on Wednesday since I wasn't trading that day. And it looks like it was a very choppy session, so probably a good thing I didn't trade. The last several days have been rather choppy. Looks like we took out that 45.71, which then we pushed up into the gap within the first time frame. Looks like we opened with a gap above the previous day's range, opened up above with a gap, came in. Ooh, is that an unfilled gap? Technically, we never filled that gap because we gapped out. Yes, we're still in this day's range, but we gapped above this day's high. So technically, there's a gap here. Interesting. I don't think I'm going to call it a gap because we're still inside of this day's range. So, but that is interesting. That is interesting to see. So I'll have to ask my expert mentor, Paul, on what he thinks about that it's a tick of a gap. 0.25. The low there was 45.55. The high of that day was 45.54.75. So, and then we pushed down really aggressively, still couldn't fill it, and then popped up. So this market just proves to be strong. Bell-shaped curve, what we went out with on Wednesday, looks like we went out with the high, the low, and a 12-wide point of control. Let's count together. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it looks like a 12-wide point of control here at 68.50. So after opening with a gap, taking out that daily high, getting into the gap above, coming down, not quite filling the gap above this day's high, we just became rotational between what seems to be two gaps. So not a whole lot there, but we'll go ahead and mark the destinations here and then kind of review on a game plan on what we plan on doing for tomorrow, coming into Monday. Like I said, I'm not going to mark anything on these 2 days here, the last two trading days, Thursday or Friday, just because I'm going to treat that range as an inside day, and there really isn't anything. So really, what the price action I'm going to be paying attention to come Monday is really going to be whether or not we take out 80.50, if we open above or below 68.50 here, and if we take out the low here at 45.55, and fill that tiny gap here on the daily. So that's pretty much going to be the levels I look at. I'll go ahead and mark our high day. This was from the 22nd. High day. Then we have 68.50. 12 wide point of control. Now that's just a magnet. It's where buyers and sellers were extremely happy doing business. Then we have the day's low here at 55. And it's hard to call that a gap, man. It is hard to call that a gap. So if we open up inside of the day's range on Wednesday, or if we open up inside Wednesday's range on Monday, tomorrow, if we open up inside this range below the 12 wide point of control, cannot take out this low of day at 55, right? If we can't take out 55, you will rotate back up to 68.50 and then continue to grind up towards the high of day at 80. Why did I put so many F's there? At 80.50, where the gap starts, and then you'll grind up into 91. And then you have the high day at 97.50, 96.11 high day, highest accepted price at 46.14. Gap that starts at 46.21.25, 46.43 on the upside is where it fills. Now this all is a little bit construed from the original price action, the continuous contract that TOS shows versus the December contract that is here. All these upside destinations that you're seeing marked here are from the December contract before it was heavily traded with any volume. So there's going to be some discrepancies between where I say the gap gets filled on the daily using the continuous contract and where the gap gets filled on a December contract, because the December contract gap technically doesn't get filled until 46.43, but on the continuous contract and true gap is 45.91. So yes, there's going to be a little bit of discrepancy in that. So hopefully you follow along there. Again, if we open up inside of Wednesday's range tomorrow, above the 12 wide point of control and can't take out the high of day at 45.80.50, look to rotate into 68.50, and then continue to push on down to 55.55 or 45.55, and then 10 wide point of control on the downside. 45.49.25 will be your next destination, and then 45.37.75 will be the low of day from the 21st. And then obviously if we take out that low of day, that'll put ourselves back into an initial 3-day balance, which would not be unhealthy for the market to have a little bit of consolidation. And in that case would cause for choppier conditions and tougher trading conditions as well. So have your hard hats on, ladies and gentlemen. Be prepared for anything. Don't fall asleep at the wheel. And, hopefully we'll have a good trading day. With that being said, ladies and gentlemen, hope you all have a wonderful day. We'll catch you guys in the next one. See ya.